All right, this is Kevin Andrews in part two of baking some pies while trading. Simple setup, simple strategy. Goal is to have something that you can come to the screen and have a set expectation or at least a small window of where you're looking to place a trade and to put a small risk. If you can risk 20 pips or 1% or less per trade, I think you have the opportunity to take a very high probability trade with a simple setup. Here's an example. Again, if you missed the first session, we're going from double zeros to double zeros, and then we're looking for 75 points of crust, and then we're looking for the market to turn inside of this upper range. So the market has gone double zero to double zero, and we're trying to figure out if it's going to make another run into the next section of double zeros. So it's running in 100 pip boxes. Simple setups. Are they going to bake one pie, two pies? How many pies are they going to bake? At this point, they have 141 up to 142, 143. Are they going to go 300, 400? How many pies are they baking? Right now, we've got 143, 143.75. Let's zoom into the 1 minute. It's Friday. What are we looking for? The market to be pumping and to be failing at this upper region. The market has pushed up once, twice, three times. Let's pull back right here. It needs to make a new high above this bubble of 143.85 or better in order for it to continue. Otherwise, it should sell off as a pump and dump day. Because we do have a high over here. It seemed to have jumped up, pulled back, and we rejected it a little bit. I need to confirm by the market actually turning to the downside. All right, so if we zoom in, we see the market is starting to fail. We got another entry for a short that's coming right here. And we're just going to walk it down from 143.85. Let's see if we can bring that back down to 75. It's 12:56. The time of day, the market is kind of wrapping up for a Friday. I don't think they're going to let the people who made money from way up keep all that money. They've got a lot of stops here. They've got stops at this level. So if we're at 143.85, they could go to 144. All right, that could be a whole pie. But right now we're dancing at the edge of the crust. 143 plus 3 levels of rise. Thank you, Stacy Burke. That's another 75 points. So we're giving the market enough room to run. It's run far enough that we know that they have stops below the market that they can go and pick up and go vertical. We're looking for trades that are not going to just go sideways, but actually go vertical. Once the market has gone from double zero to double zero, plus an additional 25 to 75 points at the times. Now, what's missing? We've gone from double zero to double zero. We've gone to 75 points. The market slowed down a little bit, but we're not at the session times. The market session times are at what? 8 to 11. 8 to 11 a.m., 8 to 11 p.m., 2 to 5 a.m. Europe. Thank you, Stacy Burke. Stacy Burke has introduced the 915 strategy to me. He's basically spoken about the things that are happening in the market at all times and have been happening. It's just something that he's come across. It's just been happening. This is how markets operate. They're going to work you up high to take it down low. How can they disappoint the most people? Are they going to make a run from one set of double zeros to another double zeros? Are they, as an example, they've gone from 142 to 143. That's one set of double zeros. The next set of double zeros is 144. It's Friday at almost 1 o'clock. Are they going to make another run up to 144? Or are they going to slow down and then have the Friday end kind of off of the highs? Because they've given a lot of money to the market. If you bought at 143, you're up 100, almost 100 points right now. 75 to almost 100 points. Now the question is, are they going to make another pie or not? They made maybe one and a quarter, almost. almost 134. The market's starting to look a little bullish. They could go to 144. I'm not going to take it all the way to 144. I've got a 15-point stop, 15 to 20-point stop max, because I don't want to be part of the whole other pie that they're making. Now, what's missing? We're not at the time of day. If you're not in a trading session, the probability of it going immediate is going to go down dramatically. So you then limit your risk, but you're still looking for the same structure. 00 to 00, plus a little bit extra for the crust, and you're looking for a pump and dump formation where the market is failing to go higher, and then it tears down to the backside. Are we on the front side, or are we in the backside? What does that mean? Is the market still trending upward, or has it pulled back, retested, and then started to turn to the downside? Now, I have a trading system that I use on my laptop computer that will show me the actual breakup trend, the retests, and then the actual motion going back down to the other side. It will be like the buyers and sellers represented as impulse dots. That's something I can share. If you guys are interested, just subscribe or just leave a comment. Now, what we're looking for is the market to fail at these upper levels of the crust. Let's say you got in worst case scenario at 75. You always should enter above the numbers. But because the market was so bullish, we have a high up at 143.87. We want to see the market kind of pump like how it is right now. And then I'm looking for the pull away to confirm that they have all the buyers trapped to the upside. And that's basically baking pies. Are they going to go to the next 00, or are they going to stretch it out as far as possible up to 75 and a little bit more? No more than 25 points. No more than 15 to 20 points. So that's 95. If you get in at 75 and you put your stop at 95 and you risk no more than 1% or 0.5%, and you do that enough times, I think you'll be able to turn your account over. At least I know you will. Because if you just wait and think about it, they've gone from 142, 143, 143.75. Are they going to go to 144? What time of day is it? It's Friday. It's 1 o'clock. They've been pushing this market up for a while. How would you disappoint the most people? Well, everybody who bought is what? Is happy. They've got their stops down a little bit, down here, down here, down here. So it can easily drop back down to 143 and disappoint everyone. Or it can go to 144 and then go to 143. So the market is at a point where you don't want to put a lot of risk on, because we're not at a market session. Let's look at how New York operated. We can see that New York was down here. All right, and if we set up our lines, if you just draw your lines and look at the market at the time of day, you'll be able to see whether or not they're going to be making one pie or another pie. Which 00 box are they heading for? That's 143 right at the open of the market. 143, 143.75. Now we're starting to see the market turn and fail right at the points that we're looking for. They've been pumping it up, and now it looks like they're not going to go to 144 as we're pumping inside of that high that they've pulled away from. We could see the first sign of the downside or the backside of the move. So far it's been pushing up. If the market pulled down, came up, and then came back down, that would definitely be on the downside of the trend. So here we have the down pull. All right, downward trend, the sell-off. And then we'd be looking for the market to retest the highs after a good sell-off and then continue downward. A 1, 2, 3 motion. We've got enough people trapped up high. Everybody's been buying. We're at the edge of the crust. We're above 75. After doing 00 to 00, are we going to go up to 144? Looks like we've got a high that is trying to test. But right now the market seems to be met with some resistance. The buyers aren't strong enough to make a new high above that previous high yet. And we're selling off. So I would expect anywhere from 25 to 75 points. You could see a major sell-off next week. They've got everybody caught high on these yen pairs. Now you're looking for it to go 00 to 00. Now as long as it stays under 184, or if it really sells off today, you could see 183 down to 182. We'll be looking from 00 to 00. Bacon pies. All right. I think that's going to be a great trade for next week, considering that it's Friday. We've gone 00 to 00. We've got a lot of people trapped up high. The market's been running for a couple of days. We've got more than 3 days to the upside, above the high of the past 2 days for sure. Let's look at the weekly. Now we've blown through the weekly's highs. And there's no daily highs that we're chasing right now except for maybe the upper structure. I think if we can see a turn here, that'll take us back down to the 143 side. 143, maybe 142.50. But right now it could just be the weekend and a good time to get off the trades. Come Monday, I'll be looking at this market again. Right now, if you're in profit from selling up at 85s, you got a great set of formations here. I'm just waiting for the downside to happen, which will be a failed breakout. Pull away below 75 would actually be a great sign to go short. If you want to go short here and put a 20 pip stop, you could. That's how the structure works. It's not a trade recommendation. It's just the ability to look at the market and say, we've gone 00 to 00. We are above the opening range of the day. We've gone an additional 75 points above that from 143 to 175. 3 levels of rise or fall. I've got a peak formation right here. And with the peak formation, I'm looking to see how the market is performing into the 3 p.m. and 5 p.m. expiration. At 3 p.m., there's markets options that expire at 3 p.m. So maybe they're working everybody up high to go buy into the 2:30, maybe 2 o'clock expiration. And then when 3 o'clock happens, they'll just really shift the market and take all the money back. They've been doing it all day. If you look at the 15-minute time frame, the market's been chopping, but it's been making money up or down. Let's say in Asia, you could have bought it up, and also when the market opened, you could have sold it. All right, when Europe opened, you could have bought it. When America opened, you would have been could have sold just pre-market. 8 a.m. there was a sell, and if you look at it right at 9:30, there was a reversal buy inside of that zone, inside of the arrows. If you didn't take that, you got to the market today, got late. Right now the market's made a peak formation high above the pie crust of 00 to 00, plus a little bit more, 25 to 75 points. Now we're starting to see a pump and dump for the day. It's Friday. There's the peak formation. There you go. There's a peak formation where the market's made a high. It's trying to test a 1, 2, 3 formation. And now we're having on a 1-minute chart, peak formation to the left, a 1, 2, 3 And now the market is failing to make a new high right here. Looking for the market to sell off. And that's a peak formation. Pump and dump for the day. Whole pie and crust. All right. Well, thank you guys. Please watching. If you're watching this, please subscribe so that I can go live and show you guys. Once I get to 50 subscribers, YouTube promises that I can go live. So if you guys like what you're seeing and these trades are working out for you, please subscribe. If this value of being able to go from 00 to 00 and having the whole pie crust set up for you is something that you're interested, I have an automatic ruler that will set up these indicators for you on your chart. And as you go from market to market, it'll be there automatically for you. You can just move the ruler from 00 to 00, and you'll see how the market is performing at these lines. Most of these lines can be drawn for you with the indicator that I'm offering. So if you guys just subscribe, I can go live. And once I get to 50 subscribers, I'll be able to actually go live and show you guys my screen. And if it makes sense for enough people, hopefully you guys can learn this for free. All right? So let's make some more pies. Let's go from more 00s to 00s. How are they playing inside a 100 pip box? What time of day is it? Have we gone from 00 to 00, 25 to 75 points extra on top of that for the crust? And then what time of day is it? It's 1 o'clock. It's really just that simple. You're watching 00 to 00. I'm going to say it over and over again. 00 to 00. 25 to 75 points on top of that or below it. Now, if you just think about it, the market's gone from 100 points up plus an additional 25 to 75 points on top of that. Everyone sees this market as either very bullish or very negative. And the job of the market makers is to take you in a direction and then to pull the market away. We're looking for explosive moves. Explosive moves happen after the market has gone very far in one direction, and then they can pull it away and stop out everybody and disappoint them as many people as possible. So if this strategy is something that you're interested in, it can be done at different times of the day. 8 to 11 a.m., 8 to 11 p.m., 2 to 5 a.m. Those are the times and windows that this opportunity is probably going to work the best for you. Right now, we have an opportunity that's happening at 1 p.m., but this is a low-risk opportunity where I don't want to put a lot on the trade just to show people the strategy works just off the structure. You've gone 00 to 00, plus an additional 25 to 75 points. If you've gone that far, everyone and every indicator is saying buy, 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 buy. And at that point, the market, pretty much you buy at the worst place. And then the market just makes a turn. So what we're looking to do is we're going to buy with the strategy we're talking about, baking pies. Once they have 00 to 00, that's the pie. That's the center of the pie crust. Once you got an additional 25 to 75, that's how much crust they're putting onto the pie. 00 to 00 is the center of the pie crust. 25 to 75 points is how much crust they're going to be adding to the pie. That's the bullshit, the manipulation, the stuff that they're going to be doing to shake you in the wrong direction. They're going to go 00s to 00s. The question is, are they going to go to the next set of 00s, or are they going to fail before they get there? How many points is it going to take for them to get to that next set of 00s? 25 to 75 points is typically enough for them to make you, hey, buy or sell and be in that maybe zone. We want to buy in the 25s and we want to sell at the upper 75s. So right now, we've got a whole pie, 00, 142 to 143. We've gone above 143.75, and now the market is starting to do pump and dump. It's giving us a formation where it's made a peak formation, pulled away, and making peak formation saying that it's not making new highs. It's having a problem going higher, meeting resistance inside of the 143.75 to 143.95 range. Basically, it's not making positive traction to continue into the new pie. of 144. The new double zeros. It's gone from 142 to 143. That's one set of double zeros. Now from 143 to 144, that'll be a whole new pie. Are they going to make a whole new run up to 144 and beyond on a Friday right now? They could, but it's Friday. And I think that they have enough traders who have made money to the upside that they can go back and take those trades back from the people that made money today. If you happen to have bought today and made some money, you're going to be closing if it gets down here, So they can go back very quickly and take trades back, take money back that they gave people this morning. Because now everyone who's been trying to buy and go long here because they came late to the party, you've been buying in this area. Now they can easily pull away the market and make those people close their positions. The more they pull it down now, they've got so many people trapped to the upside who bought at the worst place. And they've got traders now who have bought and they're in the money, but they're losing money because it's falling back now, that they're going to naturally have a flow where the market is going to roll back on itself because it's stretched out too far. If the market stretches from double zero to double zero, the question is, different markets have a 100 pip box, a 200 pip box, a 300 pip box. It may be a 400 pip box, but the time of day, this motion that it's doing, your job as a trader is to see how they could disappoint the most people and then take advantage of that opportunity. Find the easy trades. Find something where it's already gone from double zero to double zero, plus an additional 25 to 75. I saw the dollar yen before at the 50s, and I didn't like it. I was like, I want you to wait until it hits like 75 and above inside of the double black lines here at 145.75 to 95 because it's Friday. I want to see it go a full extension of 100, double zero to double zero, plus an additional 75. So that if I enter at 75s, then the market should start to show me pump and dump activity. When is it on the backside? Now we could potentially be seeing the backside of the trade. Now, I don't want to see the market get above 143.85. Now, because we're looking for 143.75 and start walking the market down. We can see from 143.85 back down to, if we say 50 points, we can go right down to 35. So let's put a target of 143.35 because that would be 50 points from 85. Okay. Now we're looking from 75. Let's see, you got to the market right now, you're looking at about 80. So this is the 85 I don't want it to be above 85. There you go. So the market should stay below 85, and we're looking for it to drop down to 143.35. That's 50 points, and I'm looking for that to happen fairly vertical and fairly fast because of the time of day. It's 1 o'clock, and we're playing a whole pie plus the crust, but the example is based off of what? We're outside of the regular 8 to 11 a.m. sessions. There isn't another session until Asia, but because it's Friday, there may be a smaller move that happens, or it may happen at the end of the day. But the setup is still the same. I'm looking for it to drop 25 to 50 points from 85 as the high. It can easily drop down to 143.50. You could see 143.35, 143.35. I'm just looking for the market to see how it's performing at the edge of the crust of where I'm expecting it to slow down. Is it doing the actual pump and dump formation that I'm looking for based off of double zero to double zero plus another 25 to 75 points? I should see some type of activity that looks like it's going to fail. Now, what's the problem? This activity should have happened below 75 to confirm for sure that it's not going to go up to 144. The time of day, it's Friday. It's a no trade zone. Well, it's actually in the trade time where it's not an actual session. So I'm playing a small risk with 20 pips because I don't know. I know that this is not a high probability trade or time to take the trade. The time to take this trade is 8 to 11 a.m. Really, since it's actually the Japanese session, taking it in Asia. This is probably something that if it was happening for the end of the day and it was Asia starting, then I would look for the market to dump right here and then retest. If it was maybe a Monday or a Tuesday or something, you would look for this market to do a huge sell-off and to pull back very quickly, because it's 119 right now in the New York session. I don't think the market is going to continue to make another push to the upside. And if it does, then that's okay. I just don't want to be, I'm not going to be wrong more than 15 to 20 points, bottom line. If I got in at 75 and I put my stop at 95, I'll still be in the market for 20 pips. 20 pips stop loss. I'm looking for 143.35 on a minimum for 50 points of a retest, probably within now and when the market opens, sometimes Monday or Sunday. But the key thing is it's gone from 00 to 00. You have 25 to 75 points on top of that. That's basically an attempt to reach to the next double zeros. You're looking for the market to then start to fail in that upper region of 75 points, and then look for the market to go from being bullish to bearish or to falling. It's like if a market is going up, it doesn't go straight up. It goes up, it pulls back, it goes up, pulls up a little bit. How much of a pullback? Like right now, we're experiencing a pullback. Now the market's trying to go back to the upside. It was going bullish here, slowed down. Now it's going up. If the market makes a new low here, that means we would definitely be on the downside of this move. If we can't make a new low here, then we're not on the downside. If the market was buy, and now it's falling down, right? It's failing to make a new high. We're up inside of that above 75 in the upper crust, okay? Now we're looking to see, now that you've fallen down, you try to make a push up, you failed. I want to see you stay below this new circle. Now we've been doing this for a while, kind of pumping and dumping. So they've got everyone buying, but whenever you've bought, it's actually falling back. So that means the buyers are pretty much losing steam. It's being sold down by everyone who's actually buying. The market makers are selling it. So once again, 00 to 00, 142 to 143. That's double zeros. Are we going to go from 143 up to 144 to make a whole nother pie? Or did they just add on 25 to 75 points of crust to this trade and literally have people just buying at the worst place? Most people are going to buy in the worst case. Depending on the volatility of the market, it's going to be about 25 to 75. But the goal is, are they going to go to the next set of double zeros? That's the problem. That's the answer that you're looking for. Are they going to go to the next set of double zeros? Or could I enter at 75 or above, slightly above 75, look for a peak formation, which is this, peak formation. Then it went pump, and when it should be taking off, it failed. When it should have been taken off right here, what is it doing? The market is failing. So let's look at a 1 minute chart, and you'll be able to see it. Everyone who went long in this area is now under pressure. If you went long in this last run-up, you bought at the worst place. If you bought, anyone above this bubble is underwater. Buyers are trapped above that circle. And I'm going to put that in black. There you go. Everyone is trapped above that line. Now they can take it to the downside very quickly. They've got everyone trapped, buying, buying, buying. Now we can see some downside activity. It's 1:23, just waiting for the new 30-minute candle to see if the next 4-hour candle is going to be negative or positive. It looks like the next 4-hour candle could be negative. All right, let's just wait for the next 30-minute. We got 1:24. All right, the dollar yen is breaking down nicely, and we'll go ahead and share this with the rest of the team and let them know you got a short on the dollar yen above the crust, whole pie and crust on the dollar yen. All right, happy Friday, happy Cash Fridays. You guys take it easy. We'll bake some more pies come Monday.